A lot of us get started in business knowing exactly what we're doing with the skill we are selling or the product we're making or manufacturing, and we're really good at that. But when we get started into our business, we're finding out that there's some skills that we're not so hot at, and they're really important if you're going to run your own business. My experience through the years is teaches me that the understanding of bookkeeping, forecasting, and negotiating are the ones that are primarily brand new entrepreneurs usually don't have a lot of history and practice in or experience. So we're going to spend tonight talking about those in particular to maybe give you a little enhancement on what you already know or a good recognition of what you don't know, so that you can start working on it and put more tools in your tool belt, in your skills tool belt for running your business. I just want to tell you how happy I am to have y'all here at the start of the fall season, and just look forward to working with you. My name's Steve Carver. My email addresses are on the screen. stvcarv@AOL is my favorite email address, or carvstv@gmail.com. I'll help you any way I can, and I don't charge a penny for anything that I'll do for you or share with you. And everything you do is confidential with me. I do share information with the sponsoring Small Business Center, Bart Rice, who is with us tonight as well. This is my presentation number 1209, and so glad to be working with you and y'all joining me on my journey and letting me join you on yours. I'm a fellow that's been in business for 66 years and counting. I'm still doing business every day on the internet and many different ways, selling products and serving customers. But I'm not a lawyer, not a tax attorney or anything like that, just a fellow offering free advice in the best terms that I can. First advice I always say to you is take advantage of professional opinions and counseling that's available to you. Get a second and third opinion. Ask someone for help as you're starting your business. And in the Clinton-Sampson County area, who's sponsoring us tonight, is Bart Rice, who is the director of the Small Business Center there. He's just been on board with us, saying, y'all please give him a telephone call, make an appointment, sit down and talk. See how the resources he has to help you and the contacts he has to help you. Your Small Business Center is at the community college, but it's not there for the college students, it's there for you. The offices are located at the college for the small businesses in the general region and people getting started and growing their businesses. So be in touch with Bart and taking advantage of that. We thank you so much, Bart, for sponsoring these programs for us. Tonight's session is on bookkeeping, forecasting, and negotiating. If we had your email address and you signed up in advance, we have sent you study guides. I encourage you to save these study guides in a computer file because they will come in handy real soon for you. They're all important. If you like to print out a study guide before our session starts each time, print out the one that starts with the number of the class, because it'll be an outline of what we're talking about and be a lot easier for you to make notes on. The others are important as well. There's two I want to bring to your attention. One is down at the bottom here, creating impressions, not just good ones, but indelible impressions. I really try to leave you with a few important things just to make sure that it sinks in. Because I know what advantages it'll give to you down the road. So take a good look at that and study it. Next week we'll talk about it specifically, but that's a really good point, and I want you to get it. Also this time I'll be sending out the course quiz. Each one of our courses, I'll have a quiz at the end of the course to encourage people to look back over, kind of like a review of what all we've learned and talking about. The first quiz I send to you, I'll send to you with the answers. And then next week, I'll send the quiz to you without answers and ask you to fill in the blanks. So it's an open book type thing. Returning the quiz is one of the criteria for earning certificates. So look out for that. Go ahead and read over your quiz with the answers. good way to review what we've been talking about in the previous classes. Looking forward, next week we'll be talking about the basic tax information that a new business owner wants to know, where to go get more information. We'll talk about record keeping, important points in that, dealing with audits, depreciation, deductions, things like that. And then we'll wrap that up with some secrets about how to close sales, just some salesmanship secrets that I've learned through the years that I am glad to share with you, and hope that it helps you make more deals. And then the following week, we'll be have an actual in-person live event in downtown Clinton. I did confirm with Bart today on the location and the time and such as that, and tomorrow I'll send that out in a special email. Everyone is invited to attend. If you can drive down to Clinton for that event, we'd just love to have you do it. We'll have some pickup food and snacks, meet each other, have a little short round table, maybe hour and 15-minute session. Folks that have, if we have a chance, and the certificates that we can complete, we'll be presenting some certificates there that we can give in person instead of mailing them. So it'll be a fun night. It's just basically a fun thing to do, to come and meet, become a part of the Academy and the Small Business Center at Sampson. So looking forward to doing that. And again, I'll send that detailed information out real soon. I do want you all to earn your certificates. Most of you on board tonight are well on the way to doing that. We're certainly glad to do it. I am keeping up with the attendance and letting you know that you see the little yellow present marks over on the right-hand side. Whether you're attending on Tuesday night or on Thursday night, y'all are qualifying to get your certificates, and I keep up with those numbers like that. So thank you all. We got some folks that have been here every night, every week. So thank you very much. And some folks are going the extra mile. I want to say a special thank you to Tisha Terrell, who is one of our Academy members for a number of years, doing a really good job with her alterations business over in Magnolia. Nicole Boykin in Clinton is driving her business. Looking forward to what she's getting ready to do, and she's going to be sharing more information with us. Robbie James at Roseboro, got a big congratulations to him. He was selected to join the Goldman Sachs competition for small business training, and hadn't talked with Robbie since he got into that, but he's promised to share what he can so that we can get good information out of that program and share it with you guys. So congratulations, Robbie. Tracy McLeod is in Burlington. She is a writer, a teacher, and a counselor, but primarily a writer. She does writing for herself and ghostwriting. We've been sharing information today, and she indeed has a beautiful website. Talks about the different things that she's doing, the books that she's selling, the programs she's offering, and it's got a great web page, bookstore. She's got some 11 different offerings that she's offering, a good cart that you can choose and pick from, so moving along. I'm sharing information with her, and we'll dive into deeper after I get some details back from her. But good images there on her presentations for moving her products along. I appreciate the fact that she's just pouring herself into it, and now we need to figure out how to help her make a lot of money doing this. Sarita Sampson, always good to have you with us, Sarita. Thank you for what you're doing and for helping everyone else. If you need certificates, business cards, help with most anything, she's ready to help as a virtual assistant. Sherry McQuarrie is writing her book and staying in touch, and we're looking forward to that printing date so I can share that. Kevin has been with us on a regular basis and promoting his virtual monitor business, and looking forward to doing some special things with him. And Lynette is with us tonight, and she's just really putting up some good promotions on Facebook. I want to encourage you to check out Lynette Barber on Facebook. Go ahead and do that. And then if you've got a special event coming up in the near future that you need an entertainer for, a class reunion or something special at your church or civic group or a private party, give Lynette some consideration. She can bring you some great music if you'd like to talk with her. Looking forward to hearing more from Angeli in Hall River. She has a business for nails and aesthetics, and also she's a teacher at Alamance Community College with her business, getting ready to crank up a new salon. Looking forward to helping her. Please find me on Facebook, lock in so that I can see your page, and we can start sharing information about our businesses and promoting all of our friends here to do it. We do have a page. The Academy has a page at Facebook, and the more information you send to me, the more I can share there, and I look forward to doing that. My job is to be assertive and to motivate. Y'all that have attended my classes know that I do all I can to encourage you to move forward, but I do want to say to you, I don't want you to think I'm trying to push you faster than you want to move. Everybody needs to go at their own pace and comfortable pace. But if you are unsatisfied with where you are now in your business and want to take it to the next level, then you're in the right place. I'll do all I can to help you, and Bart will. And so just let us know where you're at and where you want to go, and we'll give you the tools to help you motivate yourself. So we're going to wrap up we'll almost wrap up our 40 drill skills. We're going to do 25 through 32 tonight, and then next week we'll wrap it up on the different skills, which are hints, strategies, tips, little things that I want you to hang on to make a part of your business thinking, so that as you start every business day, you'll feel more confident and prepared to face the music as it's going. So number 25, it's good that you realize that when closing a sale, you do your best to send and read nonverbal communications. The messages that people send to us without saying a word sometimes give you more understanding of where they are in the situation or in their thinking than the actual words they do say. Many times we'll really learn more from what they do not say than the verbals. So I've given you a really good detailed study guide to read through on this, and we'll talk about these communications a little later tonight, because nonverbal communications have a lot to do with your negotiating skills. So check out those study guides. What is the source of motivation? Well, I want to tell you the source of motivation with people generally is someone has to be assertive. And maybe you're just getting into the business field and you don't feel like you are an assertive person. I understand that. A lot of us are that way. I don't feel like I am, and people have told me that I'm maybe too much assertive from time to time, and I'll accept that and wear it. But the truth of the matter is, we have to get things moving in business. If we just sit back being lazy and just enjoying the shade and the comfortable chair, there's very little chance our business is going to grow and go. So going and growing, assertiveness. Assertiveness equals motivation. Don't be ashamed. Don't be afraid. Don't be timid about promoting yourself, because it's your obligation to do it to make your business go forward. We not only have to motivate ourselves, we have to motivate our employees, we have to motivate our customers through our marketing campaign. So go ahead and wear this in your tool belt. Be assertive. Don't be pushy, don't be bossy, don't carry it too far, but you've got to have that energy to go forward. Take it right now as we're entering people thinking about their tax season and getting ready to prepare their taxes. There's two kinds of words here we want to be aware of: tax avoidance and tax evasion. Most instructors don't go here. They won't even get into this realm of discussion, but I want to tell you that I do want you to understand tax avoidance, because you need to know how to avoid paying taxes that you don't really have to. And the system is set up for you not to know unless you pursue it. So we will be pursuing that, especially next week on tax avoidance. But I do also want you to know that tax evasion is wrong, it's illegal, it'll get you in trouble, and we don't want to go in that realm. We don't want to get in that lane, but we do want to stay in the lane of tax avoidance and be proud of it, because that's what you need to do. We don't get knocked as entrepreneurs, as business people, just getting started in business or been in business for 66 years. You don't get told no more often than you're told yes if you've got a dynamic marketing campaign. And we do want a dynamic marketing campaign. And we just have to learn that that's a fact and not get down, not become disheartened or depressed if we're not getting every order when we place a quote. Folks have to see us and understand us and consider us usually 9 times before they'll actually ever give you a meaningful order for something. Now, that doesn't mean you have to have 9 meetings, but it is they're considering you. They're looking at your business card, looking at your Facebook ads, looking at your website, thinking about your quotation. It's a process that people have to go from cold to warming up to you to actually giving you an order. So I'm calling that getting knocked down 9 times before you get an order. The key here is, and I'm encouraging you just to know, that's the way it is. That's the way it is for everybody. So we have to be determined to get up. It's not how many times you get knocked down that counts. It's how many times you get up and stay in the race. To win this race in entrepreneurship, it means staying in the race. We'll wrap up our series and talk a little bit about tonight and next week. In that, I want you to think about what your legacy is. Legacy is the history of what you have done, what you stood for, what your goals were, what you accomplished, what you were fighting for. And each day, as you're meeting new people and you're doing your marketing and putting your word, putting your message, telling your story, folks are going to be determining right off the bat whether they're considering whether you're a giver or a taker. A giver or a taker. One way or the other, there's not much in between here. And the messaging that you send will make the difference. I want you to be a giver. I want you to be known as someone that will reach out to folks, try to help them, give all the good information that you can to them, good deals, fairness. You believe in the golden rule. That's the reputation that I'd like for the members of the Academy to have. I know that maybe you feel like that maybe I ought to be pushing for, that doesn't really count, Steve. You ought to be trying to make all the profits you can, make all the money you can. Well, my friends, I don't say I'm probably not going to go there. I am going to say I want you to make all the friends you can and create all the raving fan customers you have so that year after year, more people will want to come back to you and do business with you because you are a giver. That's a worthy goal for you to consider. When you're being the best person you can be, you'll generally be the best business person you can be. And the way you do that, the easiest way, just let it be natural that you let your candle light shine. Smile, be open with people, listen to people, be the best person you can be. Now, in week 3, we talked about the magic marketing moment with the Golden Goose marketing campaign. We got to remember that. We got to keep remembering that our business sales are going to be in direct relationship to how well we stay in touch with people that have done business with us in the past. How well we stay in touch with people that have asked for a quotation. Following up. Letting them know that we are concerned about their 100% satisfaction. That is the magic marketing moment when you're in that conversation and you can glean, you can ask those customers, now what was it you were going to do next? What's the next thing you're going to buy? Who is a prospect you might be able to give to me? Tell me what products we need to sell. Getting information from your customers, getting that response, that feedback is a key critical factor for your marketing campaign to work. The other factor is when they give you that information is for you to insert it into your marketing campaign with notes and to-do lists so that the information doesn't die or just blow away in the wind, but it becomes valuable information to help you make more money in the future. The magic marketing moment. I mentioned the 3 people in correspondence today with folks in the academy that have been sharing back and forth that I have to keep reminding you to add videos, add YouTube videos to your web pages. Learn to make them yourself or have somebody make them for you and get those videos out there where you're telling the story yourself with your own face, your own voice, and you're making that relationship building move. It is a major factor. If you're not doing it, you're cheating yourself. If you need help with any of this, with help with how to make the videos or whatever, just ask me. I'd be glad to share it with you. And I can tell you right now that if you go ahead and join the freeconferencecall.com that we're using as our platform tonight, you can be a member of that, no charge, and use the technical platform there to make your videos just like I make videos for us every night. It's very easy, very simple. If you want to get into that, just go ahead and go to Free Conference Call, check it out, and if you need any help with it, just drop me a note and I'll be glad to walk you through it and help you. Very easy way to get into making your own videos. So what are we talking about? It's football season. The question I need to ask to you, are you up in the stands watching other people play? Are you up in these stands, in the bleachers, in the cheap seats, watching the entrepreneurs down on the field in business making money? Well, if you are, I'm encouraging you. I'm trying to motivate you to let's get in the game. Let's get on in it and get down here and become a part of the game. So it's time to start marketing now. It's selling season in here. It's the fall season. It's a primary marketing season for most businesses because Christmas, Thanksgiving, and New Year's is when a lot of people make their buying decisions. What can you be doing? Do those YouTubes. Get your testimonials in place. Have you done your mission, vision, and promise statements? Most of you here have not. If you've done them before on other sessions, you can just send me copies of what you've done in the past. But I want you to apply yourself and do these statements for your own good. How about some product photos like I was sharing with you earlier? How about some business cards? How about some copies of your business cards? If you don't have them, my friend, then I don't see you making much progress as being an entrepreneur, because that is like when we get up in the morning and put our pants on, an entrepreneur gets up in the morning and put their pants on, they make sure they got their business cards in their pocket. At least have your business cards ready to hand out to introduce yourself and talk about your business. It's time to start marketing. It's that time of season. Go to Facebook, get your personal page, find me, share me, and let's get some things started there. These testimonials and videos, if you're on Facebook, you're able to share them, help get people wanting to do business with you. Basic steps, okay? I'm always going to remind you what we have to do marketing, because marketing equals cash flow equals staying in business. But once we're in business and the cash flow's starting and money's coming in and we need to stay in business, we got to do some things every day, over and over and over, as long as we're there. We'll focus on 3 skills we're going to be enhancing. Bookkeeping, forecasting, and negotiating. I've got your study guides again. Your study guides give you some real detailed information on all 3 of these. 21 different tactics employees for negotiating, lots of information about body language, and lots of information about nonverbal communication. So you've got your reading there in your study guides. Let's talk about bookkeeping to begin with. Bookkeeping is it's an art form, no doubt. It's certainly a business skill area in the accounting family. And why? I want us to talk about bookkeeping because a business owner that's running their business, small business, or getting it started, you really need to have an awareness of where you are profit-wise as you go along. And some of us might say, well, I'll get that bookkeeping information once a month, so I'll take inventory then. Or, well, after 6 months, I'll check out what's been going on. I don't want that to be satisfactory for you. I think that's a non-starter. I want you to be aware of where you are daily, where your cash flow is, where your cash flow will probably be in a month or 2 months. Where's the money going to come from to pay next month's bills, and have a good awareness that all this needs to flow. It needs to roll like a truck going down the highway, and it's intent on keeping on rolling. But it's a day-to-day operation, and then bookkeeping, and that's what we do. A lot of accounting roles in basically take a factor, and we're talking about now separating our thinking. We don't think about bookkeeping in one sense, and we don't think about accounting in another sense. And the accountant, the CPA, or just a basic accountant, their numbers basically are about looking over the bookkeeper's shoulder, just kind of watching what they're doing and how it's going. The accountants will look at the monthly totals because they're building annual financial statements and federal tax returns, state tax returns. They're interested in the stockholder issues. The accountant is looking at the big picture, the long term, where the bookkeeper, on the other hand, basically is looking at daily, every day, what's going on. And when I'm going to take what's going on today and break it down and put it into numbers, so at the end of the day, I can see an overall picture of what the business we did today is, how much money we took in, what we sold to make that money, and how much money we spent sending out to other people, and have a record of it. That is bookkeeping, that daily operation, looking at what's happening right today and tomorrow, knowing what happened yesterday. So the owner of the business, in reality, on a daily basis, can see what's going on if they understand and communicate with their bookkeeper and understand the bookkeeping books or a software system that they're using. Daily financial transactions, credits and debits, sales and bills that you pay, invoices that are coming in and invoices that are going out, maintaining ledgers, that's big sheets of paper with lots of lines and lots of numbers on them that at the bottom line gives you historical data for a certain period of time. Oftentimes the bookkeeper does payroll services as well. And the basic bookkeeping job, Melissa, you mentioned earlier that you want to learn more about bookkeeping. Well, let me give you the basics right now. You can pretty much sum it up in a cycle, in the accounting cycle that a bookkeeper works with. So let's look at this circle, and we'll be coming back to it. I like to say to the bookkeeper that your job starts out with a 0 and ends up with a 0. So as my cursor here on the screen is showing you up here where it says transactions, I'd write in a great big red 0 right there, because that's where the bookkeeper is going to start. Every morning, start with a blank sheet of paper and a 0 at the top, and then work through the daily activities. What each invoice sold, where the money walked through, posting on the journals, balancing it out, add and subtract the numbers, make sure all the tabulations were correct, make any corrections that have to be made in the journal entries, and then look across the bottom and getting everything added up where the numbers add up, and we're going to call that a financial statement. And then we're going to close the books for that day with how much money we took in or how much we took out, and then show where that money went. the deposit slip on a given day or the checkbook balance on a given day, so that we follow all the money in or out and then take it out so that we end back up with a zero at the top. That's right. It's the flow of the money, where it came from, why it came in, and where it went out to, and have a record of it every day. Whether you had 1,000 invoices or whether you had 2 invoices or no invoices, we're going to do a journal on that particular day showing all the money that comes in and out. That is the bookkeeping cycle. And then at the end of the month, we're going to take all these different days and come up with a monthly total, and that would reflect what was happening that month. So what are the tools the bookkeeper uses? Well, we all could say, well, they use a pencil and a paper and charts. That's right. And they use computer software now, QuickBooks and most popular, and many others as well. But the main thing that a bookkeeper is going to be concerned about, whatever system they're doing the recording is the tool, the listing of what we call a chart of accounts. A chart of accounts. And there's several different types of accounts. There's accounts that show money coming in, or income, or assets, or black ink. That's a set of numbers that we'll be concerned about. And then there's a second set of numbers about money going out. Payments, disbursements, red ink, money going out. Liabilities, that's what that group of accounts are. And then there's all the others, which are generally just referred to as equity, which do a lot of other things that talk about the owner's equity, stockholder issues, shares, retained earnings, dividends. A pretty deep account is stuff that you have to keep up with. But the first two, your assets and your liability accounts, that's the bulk of the work that a bookkeeper is going to be doing with. Each type of expense, each type of income, I have a different account number. So you remember when we were doing our budget and our business planning, we use those model numbers. You can refer back to them, and on each different model number, you would probably put in a different account number. So this is how all this ties together in the whole course. Everything we do from week 1 to week 8, it all ties together to show you how the business operates. So you'll come up with the different ways your business is going to spend and make money, and you'll have different account numbers for each one of those. And you stay with those account numbers on your chart so that as you're posting the individual items into your journals, each month, each invoice will have its commonality there, and you can see your trends going on. Chart of accounts. I want you to remember that term. The bookkeeping journals might be done on paper, on computers. Almost everybody in today's world does it on a computer. Some bookkeepers will still do it on paper and then convert it to a computer. I'll tell you right now, when your business is first getting started and you're working with your business models on your budget and your business plan, you can do it on paper. You don't have to get expensive computer software to figure out basically where you're going, even your tax issues. As you move forward, you're going to want to have it on software. But just getting started in your early months or year, you can do it on paper, no doubt about it. Okay, this is a sample chart of accounts breakdown for, it looks like maybe a building supply business. And so we're going to talk about how do we get started in this. Well, bookkeeping starts with that blank sheet of paper that's just talking about, with that circle listed out. The next ingredient is an invoice. An invoice is a document that is documenting a sale, a way of generating income for selling product or service from your company to someone else. So we're going to document that particular sale, first of all, by date, and second of all, with an invoice number. And just keeping these records is a must in all businesses, and it's also going to come back to what you're going to do customer service-wise and tax-wise. your invoice records are critical to doing that. So we'll have our date, and we're going to talk about the invoice number, and then we're going to talk about who the customer is. They're going to be listed down, and talk about what they bought, what they sold, different types of expenses, and that'll be listed out on a sales journal. And at the end of the day, we will total it all up as done in this simple sample that I've got in front of you. That's one example you can do it. And you can do it just that simply. In my businesses through the years, when our farm equipment business was strong, on some days we would have as many as 200 or 300. We'd have as many as 100 to 150 invoices, parts, sales, service, and such. So the bookkeeper had a lot to do the next day when they came in. A lot of invoices to figure out. Some businesses don't do their invoices but once a month, and just work it all out then, working from old notes. That is probably not a good practice and probably hurting your cash flow. I really suggest that you, in your business, try to clear your paperwork every day that you can, at least every other day, so you're making sure you're getting your invoices out and your money coming back in. So let's do a little breakdown here. Let's have a little fun. And as an example, we're going to look at a sample invoice for a gift shop. We'll say Lynette Barber's opened up a gift shop, and she's got started in business now, and she's selling lots of really good stuff. So we're going to talk about one of her sales and how the bookkeeper will treat that. So Lynette's first sale that morning got an invoice number on it, 12/12/16. So Lynette may be using the date of the year to set her bookkeeping numbers in place. So that could have been done December 12th, 2016. And then her next invoice might be 2016-2 or -3 and on forth. So you set up your system any way you want to, but I do suggest that you keep up with each date and each invoice number and chronologically. That way and numerically, that way when you need to go back and double check an invoice, and you will have to do this, invoices, customers come in, they need information, or you need to go back and see something. It's important you have these numbered and dated so you can research back and find them easily, either on print form or on computer form. So on this particular date, we sold a box of candles. Lynette had a box of candles, and she had a sale that totaled $8.56. That was the invoice amount. The bookkeeper will see that, and it will be her first invoice she's doing today. And no matter how many you got, she's going to do each one of them, break it down, take out the individual parts of that invoice, and put them into the bookkeeping system so that she can, when it's summarized, she can see what the trends are, what the profit and losses are, where the money's coming and where the money's going. So we'll break this down. So on this particular invoice, 56 cents, as you see, was for sales tax. So that's usually the first thing a bookkeeper will deal with is the tax, because that tax money is not yours. The tax money belongs to the government. You are required to collect that money and hold on to it and send it out to the government the day that it's due. So usually you're keeping up that with separately, and no doubt about it, I've got this money set aside. Just as a matter of information, the government used to pay you to collect the sales tax for them. You used to get a percentage or a couple of percent of the tax money went to the merchant who was collecting the money for them, and that was a pretty good bonus for a lot of big businesses, no doubt. But that went away a lot of years ago. Now you're just required to collect that money and send it in. So when we take the 56 cents away from the 8.56, we're left with $8. That was the sales revenue, $8 right over here. And now let's break down. The bookkeeper is charged, Lynette has told her bookkeeper, to break out certain areas. Those breakouts will be different numbers on the chart of accounts, okay? So the total sale on that chart would have been $8, but now we're going to drop down and see how that comes out. So that invoice, that box of candles, actually cost $2. So $2 would go to the cost of materials. 55 cents would go to incoming freight cost. Lynette is paying 10% commission to her sales team, and that's a mighty nice thing to do, paying 10% commission. So the salesman is designated 80 cents, so that'll go into that particular salesperson's chart of account, 80 cents. Lynette has an ongoing loyalty program, customer loyalty program, where she sets aside 5% to promote her customer loyalty program. So that's 40 cents of the sale would go to that. She also set for 6.5% marketing campaign. The marketing campaign for these candles actually, 6.5%. So 52 cents of that sale will be earmarked in that chart of accounts. So that's it. We add all those up and we see that the cost of that sale, Lynette's cost, what she had to spend to make that money, was $4.27, or 53%. So 53% cost leaves 47% margin, not profit, but margin, 47%. That's pretty good. $3.73 of that sale is considered margin. And in our business model, over in our budget and business plan, that's where we would show that. So we can see right here that if I want to make $300 selling candles, I'm going to need to sell approximately 100 boxes of candles. I will bring in $800 worth of revenue, but end up with $373 worth of margin on 100 boxes of candles. By keeping up with your bookkeeping records this way, you'll be able to really quickly understand how much volume you need to sell in certain items. Like the 47% profit sounds real good, but maybe $300 after selling 100 boxes don't sound so good to you. Because if you sell 100 boxes of candles, that means you had to have space to store them. You had to keep them clean. You had to keep them out. You had to keep them not from being stolen. Had to keep them insured. Make sure that the boxes are kept in good shape. So with everything we put in stock, there's a hidden cost to it. And as a business owner, you need to be aware of that. But the main thing is we're here to make money. And if we're going to sell $300, end up with $373 worth of margin, that's not going to quite do it. So maybe you're going to determine that I want to make $1,000 worth of margin. Therefore, I'm going to need to sell about 300 boxes of candles. That means you'll need to order bigger, get a larger order in, have a nicer display, do some nice advertising on them. And when someone comes in to buy one box of candles, you don't have some different colors and things there, so you can do upsells and increase your numbers on up and end up with $1,000 margin instead of $3.73. You get that line of thinking, you get that way of understanding through your bookkeeping information, and that's why I wanted to bring it to your attention. No matter how many invoices were done that day, the bookkeeper's going to break every one of them down. So at the end of the day, you'll be able to see what's going on with your different profit centers, which items are making money for you, which are not, which are stagnant. At the end of the week, you'll really be able to tell. And indeed, by the end of the 2 or 3 weeks, you'll be able to tell if your marketing campaign is working or not. If you're not getting the volume sales that you expected from your advertising campaign, maybe we have to make some changes and move forward on it. That's what the bookkeeping stuff can do for you. So the bookkeeper will take each one of those invoices from that daily thing and break each one of those items out. As she was breaking them out, she'll write them down in the journal entries or type them into the software. And that's called posting, as you're taking them out and posting them into the software. After they're all posted, you can run the totals to make sure that all the little numbers add up to the big numbers, that you've got everything included in, and that's doing your trial balances. And when you do your worksheet down here in Deed, you're studying that and making sure it's right. And it's almost never right. There's usually a penny or two off here, or a dollar or two off there, sometimes even more. So let's say that instead of collecting 56-cent tax, that I was the clerk and that mistakenly I only got 46-cent tax. Well, the bookkeeper has to deal with that because you have to pay the amount of tax that's due. And somewhere in here, we have to make the change from the actual information that was on the invoices to what needs to be in your bookkeeping system to make the numbers add up and be correct mathematically. And those changes that you make need to be noted. Noted what change was made and why. And those changes are called adjusting journal entries. Adjusting journal entries. And they're done either whether you're doing this on the software or whether you do it in regular bookkeeping journals, handwritten. A footnote here. The adjusting journal entries are very important to the bookkeeper because in case someday she is accused of forgery or bribery or misdealings in the books, this is the place that the bookkeeper can find her get out of jail free card. Because the changes that are made, if they're documented and she can explain why the numbers didn't add up and why the changes were made, indeed, that's going to give her protection from someone accusing her of doing something illegal or fraudulently. So bookkeepers generally will keep up with and save copies of their adjusting journal entries for that reason, and I encourage them to. Save them for 5, 6, 7 years even, and just in case something comes up and you're accused of something maybe that you didn't do. Well, once the adjusted journal entries are made, then you've got everything's balancing out, and that's called a financial statement for that day's work, okay? So now we've got a financial statement that's telling us, let's say we took in $1,000 that day. We've earned $1,000 more at the end of the day than we had when we started. So we would show right there that we have just done a bank deposit for $1,000. What day it was, I have a copy of the bank slip, and then we end up with a zero. Started out with zero, took this amount of money in, put it in the bank, ended up with zero, ready to start a new day, the bookkeeping cycle. The same operation, the same type works with sending money out, paying bills out of the checkbook. You post what bills you're paying, where they're going, what they're for, make any changes on them. You started out with a certain balance in the checkbook. You sent out a certain number of checks, you got X amount of money left. When the bookkeeper each morning is able to hand to you these two sheets, you know two things. Number one, how much business you did yesterday. Number two, you're satisfied that the money that came in is now in the bank. It didn't go out in somebody's pocket. And you also can see what checks were written and where they went and what your balance is. That gives you every opportunity to sit, think, and do your forecasting about what you need to do about cash flow on down the road. The bookkeeping information, straight to the manager, straight to the owner, is a key factor in management. Some people, some business owners almost never get into this. They just say, well, things are looking good, we'll roll with the flow, or they might say to the bookkeeper, let me know if we get in a bind. By doing that, you're losing the understanding of how all this is coming together. And that understanding is the difference in somebody flipping hamburgers and being a first-class restaurant high chef. Knowing exactly how this stuff works helps you become a better, more profitable manager. So bookkeeping can be super important to you. to prevent fraud and such as that, sometimes we need to do all we can to keep people honest. So as you're moving into the business world, it's important that there's some things that you can do to separate the duties that give you a lot of protection from fraud and to help keep people honest. I always suggest that you give some consideration of having at least 2 people sign checks. If you're not at the desk all the time, you're not writing a check, someone's doing this for you. You might have someone prepare the checks, but they must be signed by someone else before you can send them out. It's called requiring 2 signatures. Or you might say on extra large checks, let's require 2 signatures. It's depending on what's going on, but keep this in the back of your mind. That giving a bookkeeper or someone that's not an officer in the corporation, or even if they are, carte blanche ability to write checks and sign them and send them out, that's a lot of responsibility and a lot of invitation not to be 100% honest. So it's just a good standard to set and give some thought to it. As you get checks in, you want to stamp them with your stamp that says for deposit only. Make that a habit. A check that's stamped for deposit only can't be cashed by someone else at the bank, and therefore you're protecting yourself. If I want you to make deposit daily if you can, but if you can't get to the bank daily, do it as often as you can. But as soon as that check comes into your possession, write on it or stamp on it for deposit only and write your deposit name on there. That way, if someone else knocks you in the head and gets your checks, they can't cash those checks. You still don't have a headache, but you also still don't have the money in that you'll be able to get back one day. Incoming mail, I suggest that you, as the owner of the business, open your incoming mail. It's really important so that you can see the checks that are coming in, but more importantly, you'll see the bills that are coming in, and notice if your bills are being paid on time. If you're getting past due notices from vendors that you thought the bills were paid, that means your bookkeeper is not paying the bills like you wanted them to, or he or she may be writing those checks to someone else, and the people that should be getting paid are not. You learn that when you open your own mail, especially when you open the mail and you go through your bank statement. Whether you absolutely analyze it or not, but going through that bank statement, looking at each check, seeing the thing, seeing how the flow is, looking for some checks that maybe don't make sense to you, before you give that bank statement to your bookkeeper to analyze, and they know that you're looking at it, and that will help them stay honest because they'll know that if they're into some kind of shenanigans, you will see them on that statement. If you're using QuickBooks, Intuit QuickBooks, or some others, these accounting software have the ability to give you lots of charts and graphs, which can graphically show you what your profits are, losses are, sales are in different profit centers, pretty much anything you want to know in a chart form. Work with your bookkeeper to give you these accounts so that when you ask for the monthly review, that they automatically print you out the charts and information you need to track your different profit centers, your different expenses. That way, if you can see month to date and year to date examples of how it's going for you, and just give you lots of good information right up front. But you have to ask your bookkeeper or your software assistant to help you with that. Payroll. The bookkeeper oftentimes will be doing payroll. That's a different area of expertise, one that mostly now is being done on software, and it's an important factor. I will mention now that there are a lot of payroll contractors that are offering payroll services to small businesses, and I have many small businesses that have told me it's a lot easier and less money for me to just send the information in on Wednesday or Thursday on whatever day it is that they send the information to the payroll people, and they have the checks back on Friday. That's working really well. But you might want to do it yourself to begin with, or have your bookkeeper show you what's going on there. I'll mention to you that with payroll, it's important that, one, you make sure that the bookkeeper or your payroll clerk, whatever you want to call them, is responsible to you, and the employees and the other folks in your organization know that if you got a problem with your paycheck, with your deductions, that bring it to you, bring it to me. Don't go arguing with the bookkeeper. Don't go arguing with the payroll clerk. Any settlements that need to be done, you need to have an understanding of what's going right or wrong, and then you work it out with the person that's doing your books. You don't want your bookkeeper to be in constant arguments or discussions related to dissatisfied employees. It will create a bad situation that will screw up the whole operation. The bookkeeper needs to be responsible to you and not to everybody else. And that's the best way to keep a friendly house and everybody going. There will be some employees that will never be satisfied. And if they got someone they can argue with or chew on their ear, they'll take advantage of it. But you just have to draw the line, do it right the first time, and stay with it, and that'll save you a lot of grief down the road. Bookkeeping. Any questions so far that you might have, you might want to ask now related to bookkeeping? I'll say to you that bringing a bookkeeper on board as a full-time employee is not an option for most small companies just getting started. There are a lot of bookkeeping and accounting and tax services folks around that do a very good job at a very low cost. I'll be glad to give recommendations to you wherever you are if I'm familiar in that area. And your small business centers in the different towns and communities will know what bookkeeping systems or assistants are ready. A bookkeeper generally will do a small business just getting started for probably $100 a month type number, and sometimes less than that, sometimes a little more depending on how much you got going on. But certainly a lot less than that. You could hire a full-time employee. So if you want to give that some consideration, virtual assistants in bookkeeping, definitely the way to go for most small businesses just getting started. Do you play chess? Do you play checkers? I enjoy board games like that. I always have since I was a little boy and still do now playing with my grandchildren. Chess and checkers are games that are focused on what's in front of me now, what I do now, how is that going to affect what's going to happen 2 or 3 moves later? What type of strategy do I have to end up where I want to go with 2 or 3 moves ahead? This is the sense that you will want to have as you're planning your business in forecasting and negotiating. Negotiating is when we actually work out the deal with whoever we're working with. But thinking about it ahead of time, the forecasting of how the negotiations will go is the chess and the checkers part of this consideration. It all ties together. None of us have a crystal ball, and none of us know for sure what's going to happen tomorrow. In fact, we don't know for sure what's going to happen in 2 minutes, right? It's 1 minute at a time, 1 day at a time. But we're in this for the long haul and need to give that consideration. So that's why we're taking time to talk about this tonight. Forecasting, to begin with, is in our minds all the time. My wife and I sit and we saw the forecast for this weekend being a rainy, cool weekend. So that's what's ahead of us in eastern North Carolina. And we learned that through the weather forecasting. Those of you that can go on cruises and take nice trips out into the Caribbean and to the oceans, I'm happy for you, and I used to love to do that, and I hope that y'all still do. But you know what? Every day we're interested in a forecast if we're on a cruise or a vacation, right? It's just all important. If we're in the farming business and growing animals, livestock, and such as that, we're all about forecasting what month it is, when those babies need to be born so the grass will be green and the weather warm, they can be outside and healthy. Forecasting affects us in pretty much all kind of businesses, whatever that we're doing. If you're in the firefighting business, you know watch the forecast every day, because lightning strikes is the major cause of fires out in the wild woods or such as that. So they're interested in forecasting. And you know what? Businesses need to be forecasting too. The ones that are not forecasting have a sign in front of their business. It's called going out of business. I don't want to see that in your store. That going out of business sign is not fun for me to look at, because I know when that happens, someone is not happy. Normally they have lost money, time, interest, investments or such as that. Sometimes that's not the case, but usually going out of business is not a pretty sign. And always, if the going out of business sign is up, that means the forecasting probably didn't happen. That's why I want to talk about it tonight, because I don't want that to be where you're at. What are the different things that you can forecast and be thinking about it all the time? Different things you can be forecasting and thinking about to keep you out of jams, keep you out of bad. Comes to my mind first if you're selling products. Selling products means you need some inventory, available stock to ship and sell to your customers. And if you're stocking items, the concern is how often can you turn over that inventory. It's not important how much stock you have. Not nearly important about how much stock you have as how fast it's turning over. Because what we're wanting to think about is that every piece of product or stock we have costs you part of your operating cash. So the more cash you have tied up in inventory, the more serious it becomes. And if that cash is stuck and not moving and stale, but your other expenses are running like a whirlwind, that means you're getting behind on cash flow. And you got your money tied up where it's not helping you. So we're always going to be constantly thinking about inventory and turnovers. We'll use the word turns, but that's abbreviation for turnovers. Keep it in mind how we don't turn it over. Remember back in the bookkeeping about the candles, how many candles we're going to have in stock, how fast can we sell them, how fast can we get rid of them, and if we have to, how fast we can liquidate them. That's in our mind always when we talk about turnovers. Major important thing. A key ingredient in a savvy, wise business owner will always have this kind of on their mind, right real close by to make decisions. If we don't need staff, if we don't need help, if we don't need to have bring people on to help us make money, we don't need to forecast when we need them, how much they're going to cost us, and what kind of training they're going to need. We need to think about that in advance so we can make it happen. Just bringing staff on at the last minute to do this or that, and they don't know how to do it, you're going to end up with a lot of mistakes and a lot of unhappy customers and a lot of expense that you didn't plan for, and maybe losses. So if you're thinking in terms of staffing and delegating, right now be thinking, when do I need to do it? How much pre-planning do we need to do to make it happen? We've got seasonal business coming on almost in everything we do. And if our seasonal business is important to us, when are you going to have to start investing in that particular season? And how much money is it going to take you to get ready to have the inventory and the people and the stock there to start selling? That means you need to do the predictions. You need to make the sales. You need to make the orders. And if you're not careful, you'll be placing orders for items to come on in, and the items come in before you have enough cash to pay for them. So think about that. How is this all going to work? So as we talked about last week, this is a critical area why you want to have some cash reserves, some credit lines, some good relationships with your vendors so you don't get stuck in a jam here. and you're forecasting how this is all going to come out. The next thing that's important for us to be forecasting as new business owners is what are the risks? What are the risks that may just be really serious that I need to be prepared for? Or what are the risks that I need to be doing everything I can to avoid? That's called risk management. And in forecasting, it is a major issue for all of us to be considered with that. Because we got exposures and hazards down the road, and I suggest to you that you actually think about it and make a list of what are the different risks that might be involved in your business. Now, I can tell you that any independent insurance agent that insures small businesses, they have computer programs with their different insurance companies that if you type in on that software what type of business you have and say, tell me what the risks are, you'll get an automatic printout of a different kind of risk. Now, I hadn't tried this on AI yet, but it's probably will give you that as well. So that will be a good exercise for you to do, to have in plain sight the different type of risks you need to know that may come your way, and then you can take action to guard against that with risk management tools. A lot more than just insurance. A lot of things you can do like planning and training or cleaning up or housekeeping sometimes can help you avoid most of the risks that are headed for you in your business. One of the best risk management tools you can do is to talk to someone that's been in your business, that's been there and done that. I had the occasion this past week to talk with a customer right in Clinton, North Carolina. We were talking about the type of balers that we sell now, little mini round balers, and this gentleman is baling pine straw. He's been baling pine straw for 18 years. And I was asking him how many bales of pine straw he had done since he got started with these mini round balers. He said, well, Steve, I'm just not sure, but probably about 750,000 bales. Wow. I said, that is a lot of pine straw bales. He said, it is. He said, but you know, these little balers, they spit them out. I'll do 100, 200 bales a day. And it adds up over the years. So I knew right then that I had someone, a go-to person I could go to for good advice. And these folks are around all the time. Whatever business you're in, find a good counselor, a good buddy, someone that you share information with to bounce ideas off of. Just because they got gray hair don't mean they don't have a lot of information to share with you. And usually when asked, they're glad to do it. So find someone that's been there and done that. They might be able to help you stay out of a lot of jams. So we're in the business now, no doubt about marketing, and we have to figure out our strategy. If we don't stay in business, there's no doubt about it. And the changes that are happening all the time. So forecasting what changes are going to be made right now are important. So I want to say to you, that's not in your notes because I'm just starting to feed this information in. One of the notes I want you to make in forecasting is, what changes might I need to make to stay in better touch with the different generations of customers? The different generations that look at things differently than I do and use different terms, have different opinions on different items. Am I forecasting in my marketing campaign different messages for the different generations of people, different ages of buyers? Because in today's marketplace, it's multi-generational. You've got the folks, the baby boomers, where I am, in their 60s through their 80s, and right down the line to the brand new folks that are on board, the Gen X's. Each one of our generations looks at things differently, and we would respond differently to different photographs, images, sayings, presentations. Forecast what you need to do to teach each and to reach the different generations. Different styles and qualities. Some of us are pricing for the lowest price in the market. Some want the more higher price. And are you doing good risk management by offering a diversity In your risk management of your marketing campaign, are you offering that diversity of price ranges that will attract the customers? And are you making sure you're not saying take it or leave it? That's a big risk management tool. Don't be saying take it or leave it. And if you put that into your forecasting plan, it'll make a major difference for you. We're not be negotiating and closing deals as small as selling a pencil on a piece of paper to someone, to doing a $1 million contract on providing services or materials for 6 or 8 months or several years. The range of negotiating, there's no stop it, there's no limit to it. But there's also a few factors that will remain the same with all of them, no matter how large it is. And what I want to ask you is, I want you to know that you can forecast how a negotiation will go. You can get real close to forecasting how a negotiation will go. We're using the word forecasting and we're using the word negotiating and time together because they are locked together. Year after year, you will learn that if you are better prepared, you will have a better chance to close the deal you want to, at the terms that you want to close it at. And that ability, that skill to get there is all wrapped up in your total preparation, and you're willing to do the homework that it takes. I did a deal today. I helped my new company do a deal today in selling products to a gentleman in Puerto Rico. And we were dealing with a new transporter and a new customer. There's a lot of newness here. A lot of folks not really knowing each other, not really trusting each other, but we come up with a deal that looked like it was going to work. And it was my job to put it together and make it look good and work good so that all the questions were answered and people satisfied. In other words, it was my job to do the preparation to make this negotiation become finalized and agreeable. And that's what I did. It took several hours of doing it. That would run up the cost, my preparation time, run up the cost of that particular deal, but indeed it was necessary because that time is critical with having a good deal the first time and every time and making your presentations be a work of art. When you do that and the customer gets ready to buy the next time, he's going to realize how easy it was and simple and trustworthy it was to do business with you, and they'll come back automatically. So doing this preparation is a good investment for future relationship business, and that's what we're after now, right? Year after year, time after time. So you want to do your introductions, every negotiating where you're sitting down face-to-face, doing it by email, doing it by phone. Make sure you're positioning yourself to be in a good position. If you're in the same room, the actual seating that you choose is important. And I like to tell folks, when you're going in and you're going to do a deal with someone, do your best to sit beside them, or at least at a corner and they're on one side. Do your best to be not across the table at odds. Simply being on the other side of the table is simply saying, well, you're on one side and I'm on the other. And in negotiating, you want to promote the sense of, hey, we're on the same side. We're on the same side here. I'm on your side, you're on my side. We're here after a win-win situation, not a win-lose situation. One wins, one loses if you're on opposite sides of the table. Just a simple way of thinking, but I will assure you it makes a major difference when it comes down to making things happen. The documents that you prepare need to be not just scratch sheet on a piece of paper, just not numbers that you can read. If you're going to be presenting documents to a customer, make sure they're just right. Have all the questions answered and do it right. You don't want to give away any more information than you have to, but you want to give them everything they need to close the deal right now. I like to say your document needs to be a work of art. A work of art means that it's ready to deal with. You're ready to see it. You're proud of it. It's ready to close this deal. And having that good document is ready to sign or just fill in one line, That's a big, powerful tool. And you got that because you forecasted what the needs will be and you already got it down on paper. Frequently asked questions are a big tool for you. You're going into a negotiation, think about the questions that's going to be asked and need answers for, and go ahead and write the question down, or go ahead and write the answer down. You'll have a chance to get a really good answer that leads to where you want it to go and make you look incredibly smart and professional. Taking the time to do these questions and answers, move the negotiation on in your direction. If we're dealing in dollars and cents and money, as oftentimes that's the case, think about and forecast what your range will be. With pricing 3 weeks ago, we talked about our high dollar and our low dollar and all the different ranges in before. That's what I was talking about. What's the highest you can expect and what's the lowest you can go? Have that written down on a piece of paper so that as it's time to make the offers and the counter offers, you know what level to go to with each one. Not just guessing at it, because you know where you want to end up. And if you think about the way we did those negotiations, you'll see at what level your next bid needs to be. Do it in advance so that when the actual negotiation starts, you're prepared and other people are sitting there scratching their head. That gives you a chance to forecast how the negotiation will go. It's building a roadmap to where the conversations are going to be doing. You've got secret weapons, whether you know it or not. But I want you to know it. I want you to list them down. Your secret weapons are the little things that you're bringing to the table that your competition's not. The little things that maybe you're putting into the deal and not charging for it that the competition's not. And if you remind the customers of that when you're negotiating and it's time to do it to close the deal, you can use these little tidbits to remind them and show them that your deal is worth more money. You are including things in here that they'd have to pay for from somewhere else. That's called value-added features. It might be your experience, it might be the quality of your product, it might be the warranty you're offering, the better deposit situation you've got, a discount maybe that you might be able to offer for a concession. Think in advance of when it gets right down to the crucial closing the deal factors, what you might have to offer that helps you win the deal. If that information is available to you right then as you're negotiating, guess what, my friend? You're going to get the deal. Most successful negotiators get most of the business. And the reason they're successful is they've done their preparation and they do it. Another factor is a secret weapon. It's not written down here, but here's a big deal. Please try to remember this. As you're entering into a negotiation with a customer, and Pete, I bet in your experience you would agree with this. When you're entering into a negotiation, starting a deal, if you walk in the room and you start the conversation out, and there's no doubt in the way you're presenting yourself that you're bringing the best deal, and there's no way probably that you're going to leave the room without getting the deal, because you just feel in your heart and you've convinced with your conversation to the customer that you're the one, you're the positive one. I've come here to do business, and all we got to do is just agree on the details. Your positive thinking attitude, forward thinking, successful thinking is really, really important, and the customers pick right up on it. The customer says to themselves, wow, he's pretty confident we're going to do business. He must be bringing me a good deal. Or, hey, I like the confidence in this fellow. Yeah, he's pretty much satisfied that he can satisfy me. You have to present that. On the other hand, if you come in like you're almost apologizing to be there, or you've got no business in the room because you're brand new at this work, or thank you for this first opportunity for my first sale to ever be made, you're really cutting your own throat. Throw that thinking away and bring in confidence, preparation, documents that prove that you've done your homework, and your chances will improve immediately to get the deal. You have forecast the situation you're going to be in, and you've prepared for it, and that's really going to strengthen your negotiation. Another secret weapon that I've learned through the years, and hang on to this if you want to. Sonia, this is a big deal for you out there working. And I can already tell you've got the personality and the drama, and Melissa, you as well, to make this happen. Let's say that we're talking with our customer, back and forth, working through the details, and you're presenting, you're making your pitch, and you are sensing now that the customer is giving you buying signals. In other words, they're kind of liking what they hear, and you're sensing that maybe you can close this deal. First of all, you had to have your radar on to recognize that moment has come. And this is really critical for you. You have to keep your radar on to sense that the customer has moved from just talking to maybe, hey, I'm ready to buy. Well, when that moment comes, you need to know that you have to capture the moment. You need to become the player. You need to capture the moment and maybe bring in some energetics, some drama, a little suspense. Maybe you'll put some silent pauses in your conversation. Maybe you'll start using gestures, bringing the focus to what you want it to do and closing the sales. And you will do what it takes to get 100% of their attention, because you're moving, you're thinking, hey, let's close this deal. Now, the customer oftentimes will just follow the lead. If they've already got to the point of sending you buying signals, they want you to become that professional salesperson and close the deal. Deals don't close themselves. Someone in the room has to be a closer, and that is you. And you do that by sometimes capturing the moment because you recognize it, and then bring the drama in and start with your eye movement, your voice, you turn your volume down, asking for that signature, getting that handshake, and actually doing the deal. It's up to you to do that. And as a professional, you want to be excited about doing it and make that happen. Next week, I'll give you some actual examples of better to do that. Now, generally in negotiating, in the rules of the world, wherever you are, there's going to be 21 different negotiating ploys, lots of things you have to do. If you go take college courses anywhere in the world, then it'll tell you a few things. One thing that it'll say to you is, the situation now, let me set the stage, is you need to buy something. You're out shopping to buy something with your money. And the rule is that before you go out shopping, you want to have a BATNA, that's what they say in all the textbooks, a better alternative to a negotiated agreement. What that's saying is you are after plan B because you have already done some homework. You found a product that will serve your need at the right price, okay? And you've done some shopping and you've determined that I can go ahead and buy this and probably be happy. But now is when the negotiating starts. Now is when you take your skills and go out and earn your keep as a business owner. Now is when you go out and find a better deal than what you've already got. And that's where you start negotiating. If you had a deal to get this particular product for $20,000, then you're going to go out and start negotiating to try to find it for $15,000. And wherever it takes, carry forward. What this will do is, number one, help you save a lot of money, or number two, make you really sure that you got the best deal that you possibly could get. But you're always negotiating from a plan B, keeping plan A in hand. Now, in fairness to the rest of the world, I want you to say that person that gave you that plan a good deal on a good product, don't just use their quotation to go out and use it against them, even though that's kind of what you're doing, but go out and use their quotation to strengthen your satisfaction with it, in other words. And if you do find someone else, and hopefully you will, that's offering you a better deal or what you think is something you have to consider, then I want you to give that plan A person a call and just tell them that you've really been considering their offer, but you need to make them a counter, and let them know you're real serious about it, that I'm ready to counter your offer with this. Give them a chance to close the deal first before you go give it to someone else. They were nice enough to work up the quotation for you. Apparently, it was a good deal. And indeed, they may have some wiggle room that they can meet the challenge and offer or give you a counter that you like. Don't just leave them hanging, because once they learn that you've used their quotation against them, they're not going to work with you in the future. Okay? Just keep that in mind. We have to keep the conversations going sometime to find the right deal. It's not always the cheapest deal is the best deal. That's not the case by no means. But what is the case by every means is maybe I've got a better deposit plan. Maybe I've got a better warranty. Maybe I've got a better delivery date. Maybe I can do this and that the competition can't do. And if we don't talk about it, no one's ever able to figure out if we could find common ground. So there's a strategy to keep conversation going. Most folks don't know this, but you have to know this to be a successful negotiator. We have to keep talking. We have to keep sharing ideas and information. And the way to do that is not to say, no, it's over, take it or leave it. Instead, we have to say, yes, I can do that if you will do this. Or, no, I just can't do that, but if you will make this change, we can. In other words, your reaction to their offers is never no, but it's yes, if, or no, but. Yes, we can do this, but let's think about the changes it might make. In other words, you're saying to them, thank you for making that offer. And I usually use those words. Hey, thank you so much for the offer. That's interesting. And yes, I can do that if. Or thank you for that great offer, and it's a good offer. But no, I can't do that offer. But if you can do this, maybe we can go on. Is keep the conversation going. Find out where you can find common ground. And you just have to learn to do that. It's not difficult to do. Even on smaller items, it's certainly easier to do that, or more often done with big ticket items, thousands of dollar type items. But even with little sales like $100 or $200, even with customers like that, and I sense that they're not going to give me the order, then I'll say, well, let's see what we can do here. Maybe I can ship it at a lower cost by a different way, or maybe we can use a different part number to get you a better price on it. Keep talking to that customer. They came to you because of your marketing campaign. You got value. They want to do business with you. You're the professional in the room, and it's up to you to move the conversation forward. Maybe you're going to give up $1 or $2 profit, but if you make the sale and you start a continuing relationship with a customer, it may make you thousands in the long run. Do what it takes to get the deal, okay? Negotiating fundamentals. There are a few things that just apply always, so let's talk about the 4 main fundamentals. Ready? Number 1. We're balancing a scale. There's always an in and an out here. And so we're thinking, I'm not going to give up anything unless I get something in return. Just that simple. Yeah, I want to talk. Yeah, I want to negotiate. Yes, I want to bargain with you, and I'll give, but it's a give and take. So anytime you're getting ready to give something up, think about what you're getting in return. Okay? Number 2. You're going to set your advertised marketing price, your advertised sale price high enough that you know you've got negotiating room in there. That's factor number 1. Nothing works if you start out too low. So you don't put your price up there high enough, and they ask you what the price is, or they see it in your market, they're going to come to you, and it's your job to get them to make you the first offer. Maybe they're going to buy it at the asking price, and that's fine. But if you sense they're wanting to negotiate, then it's up to you to say, well, I understand where you're at. What are you offering? Get them to make the first offer. No serious negotiation can start without someone making the first offer. Hopefully you're going to be in a position that you've given them a high price and they're going to make you an offer a little bit under that, or maybe a lot under it. But anyway, every offer is good, every offer you want, because that's where the negotiation starts. So you have to start your pricing up high. Now, when you're buying, when you're purchasing, then you always want to say to someone after they give you their counter offer, is this your best price? Oh, come on, man. Surely you can do better than that. I didn't come all this way to hear a bunch of junk. I can get that kind of pricing anywhere. What's your best price? I call that a poor mouthing tactic because farmers have used that on me all my life, and they're really good at it, and it's a powerful tool to use. I want you to own it. Don't be ashamed. Don't be proud, so proud of yourself, or so sophisticated feeling that you can't say to someone, is that your best price? I work hard for my money. I had a fellow from Arkansas today tell me that I'm just a poor farmer in Arkansas. Can't you do better than that, Steve? And I did. Yeah. Is this your best price? Do it, because what will likely happen is the person on the other side will give you a better price, a lower price, and you didn't have to give up anything but a few words and a little bit of breath. That is a good negotiating ploy. Use it and use it and use it. Be proud of it. I don't care whether you're wearing a three-piece tailored suit or a bathing suit and flip-flops. It's good negotiating wherever you are, whatever you're doing. People in business like you and I are going to leave some room for negotiating in our advertised price. And we left it there so we can negotiate with people who say, is this your best price? Now, on the other side of that, so we just don't fall off the log, your answer should be on the selling side, you know, that's a good question, and maybe I got a little wiggle room there. Let me ask you, what are you willing to pay right now? In other words, you've taken the momentum from what is your best price to getting them to make you an offer. You got a firm offer, then you got a place to start from. As we talked about earlier, you are responsible to keep the process going. Do not close the conversation. And you do that with yes, if, and no but. Now, I've written a little book, a little pamphlet on that. It's at Amazon.com. Yes, if, no but negotiating. Sells for $1 or $2, but this is basically what it says. Keep talking, keep hope till you can close the deal. So let's look at the tactics employees now. 9 basic important ones. All of them are important, but in my opinion, 9 basics. There's 21 actually in total, and they're in your handout study guides. Bursting the bubble, flinching, silence, pending price increases are really good ploys right now, no doubt about it. Red herring, retreating to higher authority, splitting the difference, show me the cash, nibbling, and then there's 12 more in the study guides. Okay, so let's go back and just talk about them for a minute. Burst the bubble. That's when a real estate agent would call you and say, hey, I see you got your property listed at X amount of dollars, and I've got a client that's interested in it, but they're not going to be able to make an offer close to what you're doing. Are they wasting their time to send you a lower offer? That ploy is all about getting you conditioned to a low-ball offer. And it's effective. There's nothing wrong with them doing that. It's a courtesy type thing, like they're doing you a favor. But the bottom line is you're always going to say, or you tell them to send that offer on in, I'll consider any offer. Well, you know it's coming, and you know it's going to be a low offer. But that should not give you any discouragement from looking forward to seeing what it is. Because they don't know that you and I have had this conversation. You set your price up high enough, you've got a lot of negotiating room. And you plan for that. You plan for low-ball offers. And indeed, you may be able to close the door. But it's an offer, it's something that you might use on the other side. Flinching, That's when someone makes you an offer and you say, oh, gosh, that hurt. That hurt so bad, like Fred Sanford used to do on Sanford and Son, the TV show. Make that offer act like it's hurting you. And sometimes if you don't say anything after it, you'll get a counter offer for a lower price that didn't cost you anything to get it. Silence. Simply just looking at someone plain-faced, like, I am astonished you would make me an offer that high. And not saying anything, just look. Silence. And the inexperienced negotiator could very possibly come back with a much lower offer. In this world of tariffs and inflation, using the ploy, you need to do this deal now because prices are going up. We got prices going up. It's time to do the business right now. I talked to the president of my new company today, and he said we're getting ready to do some advertising on encouraging people to buy now before the first of the year, before prices go up. And that's a good idea. That's something we ought to be doing. Red herring is when you focus on the good things on your product so that they don't focus on maybe your weaknesses. It's paying attention to the things that make your product look best and not the weaknesses. Retreating to a higher authority is when someone is saying to you, I'd like to do business with you, but I have to go talk to my wife. Or we can't close this deal today, I got to talk to my boss. That's a real good negotiating ploy, because when they come back, they're going to come back with an offer that's lower than where you are right now. So you always want to fill out your negotiating partner and say, now, I'm ready to do business today. I like to say I put on my trading breeches. I'm ready to do business today. Are you? If I can come up with the right number, can you give me the order yourself? And people usually will be honest with you. If they can, they'll say yes. If not, they'll say no, I've got to go talk to somebody. And when they tell you that, you automatically know that you want to save one more negotiating counterpoint, because if they come back, it's going to be for a lower offer, and you need to be ready for it. Splitting the difference is when you're at $100 and someone else is at $200. You want them to encourage you to say, hey, well, let's split the difference at $150. Let's split the difference here and find common ground in the middle. Splitting the difference, you encourage them to say that by the different conversation sentences that you use, because if your party on the other side says, let's split the difference, that is a strong buying signal that they are ready to buy and they're ready to negotiate more seriously. So you look out for that signal. Show me the cash. Getting down to the bottom line now. If you want to do this deal, I got this amount of money in front of me right now. It can be yours, or I can carry it down the street. So that's as strong as it gets. The negotiator that has the cash and can offer it to the other side, you always want to offer a lower amount of cash, of course, to get a better deal than where you're at. And then it's up to them to say, yes, let's do the deal, or no, but if you can increase that a little bit, maybe we can. But show me the cash will get their attention big time. And the most used, maybe the most powerful negotiating tool around period is called nibbling. Nibbling, like you're nibbling on a cracker or a potato chip. Nibbling is after you work out most of the details in a deal and agree on the price. Then the conversation kicks in by one party saying, now, we did agree that I would get this in the deal. Or you did mention now I'm going to get that. Or this was a part of that package, right? And you keep adding little things, all that you can, to eat into the other side's profit while you're increasing the value of what you're getting. Nibbling is a big, big tool. I want you to use it. It's a fun tool to use on the other side. But on your side of the table, the way you stop that is once you agree on a deal and you get a certain price that you've agreed on, you draw a circle around that price and say, okay, here's our deal. How about just initialing it right here, and I'll do the same. We'll get the paperwork drawn up. Then when they start nibbling, you say, well, you know, this was the price, and yes, I can do that if we can add my cost to it. And you start adding. You start adding. Every time they start nibbling, you start adding money, and the nibbling will probably stop. Contractors often will say they make more actual profit money on the change orders after the deal as customers want this and they want to make this change and that change, oftentimes contractors will say, we made more money, more actual profit on all the changes people want to make after we've closed the original deal than we did on the original. And that's just part of the game that you know is going to be coming. So I hope these help you in a big way. Negotiating and closing the deals getting really down to a lot of folks just love to talk and they don't know when to stop talking, but there's a time to stop talking and start selling. And you do that when you recognize buying signals that the customer's giving to you. Different things that they say give you those hints that they're assuming ownership now, or they want to talk about delivery, or concentrating on the different details, working out little details, and if they can't get it in a certain time, being real disappointed. Those signals mean that you need to wrap this thing up. You need to close the deal. Next week, I'll show you some secrets about how to do that. But the key is preparation. Being ready to negotiate means being ready to close your deal. Have all your paperwork ready so that all that's needed is a signature or an initial right in the final line. And once you do that, congratulate them on being a great bargainer, being a great negotiator. This is a key factor. That customer, after doing the deal, has to feel good about doing it and doing business with you. That's your key ingredient to a long-term relationship. At the close is the moments that people remember, and remember forever. And if at the close they were feeling really good about what they accomplished and felt really good about working through it with you, then you're going to get more opportunities to do business with them in the future. And that future business is all about us staying in business for the long haul. Then, get out of there. Close the deal, shut up, and leave. Buyer's remorse is a real thing. Other people will come in the room, the wives, the partner, somebody else with a great big opinion that's not worth anything, and do their best to talk the people out of doing the deal. It happens. It happens a lot. And you don't need to be there to have to start defending yourself here and there. You take your signed paperwork, leave them with a good taste in their mouth about what a great deal they did, and if you're out of there, your chances of buyer's remorse not catching up with you are better, okay? Can't say they won't ever give you a call, but they will. I will tell you that if you're doing business out here in the real world and you have a type of business where people come in on a Friday afternoon or a Saturday morning, as you're selling products or services or doing deals, I'll just give you a little hint. Doing business with the people that are drinking or under the influence or on some type of mood change situation, and this happens on Fridays and Saturdays, and you do a deal and you accept money from someone, you hold on to that check Monday and Tuesday. Because if you have that feeling, there's a good chance that on Monday or Tuesday, the wife or the husband will give you a call and bless you out for taking advantage of the customer or find something really wrong with what they bought, and it's all your fault, and they want their money back. Bottom line was it was a marital issue or a relationship issue and had nothing to do with your deal or your product. But here's a little fact that'll help you through the years. You accept those calls, you be very courteous, you be very nice, because now that I've told you this, it happens. But that doesn't mean you don't have to lose that customer. And if you're nice to them and you say, no problem whatsoever, I didn't deposit the check, it's right here for you, you can come and pick it up or I'll tear it up. If you're nice about it, greetings, look forward to working with them in the future, you understand, no hard feelings, all that kind of sweet talk, there's an excellent chance that within an hour or two or maybe the next day, that same person will call you back and say, you know, we've talked about it and thought about it, and you've been so nice about this. I think we're going to go on forward with it, and let's do the deal. I've had that happen to me so many times. It's incredible. Or sometimes not in the next day or two, but in the future, near or far, that same customer come back to you and do business. You just accept the fact that some things you can't change as doing business with human beings. I always like to say that when they do make that call back to me, I say, now, I need to know for sure. We're going to work with you on this, but was there really anything wrong with my product or what we did, or did y'all just need to rethink this? And every single time they say, we just really needed to rethink it, and so glad that you were willing to work with us. That's turning a negative into a positive, and a good example of it. Leave you tonight with a factor about the mark you set, the legacy. Remember the giver and the taker? We want you to be a giver. But if you're buying and selling and you're negotiating, you're going to be negotiating with people that supply new products or used services. And your reputation and your legacy as a negotiator are really, really important for your survivability in the business world. You want to establish a reputation of being honest and frank and negotiating in good faith, not wanting to beat somebody down to the lowest possible dollar, but interested in your vendor, your supplier, and staying in business. You want to be a negotiator that pays their bills on time or according to terms, and you don't mind asking for terms or help. When you have that type of relationship, then people are going to look forward to doing business with you. And in good times and bad times, you need people that are willing to help you. You might get in a jam sometime and you need a little extra discount on this so you can sell it to someone and get the deal. And it's okay to ask for it. You don't do it every time, but sometimes you need to say, can you give me a little extra here to help me get this deal? Or can I pay just a little less deposit and give you the rest when it's due? The relationships you build in business, month after month, year after year, are a key factor in your ability to stay in business when things really get tough, when the economy goes downhill, when you need a supplier to send you some products so you can run a sale. It all gets back to you being smart enough to know that the relationship is more important than the one particular deal. And that's where being the right kind of negotiator that does stuff. And these screens represent a farmer customer that we had that was a great negotiator. He was a serious shopper. When he spoke, he was trustworthy. He always paid his bills. He did things by the book. That's what I want you guys to do. You can call anyone in the world about Steve Carver and Carver Equipment Company and different businesses that I've owned. Did I pay my bills on time? I did. Did I negotiate in good faith? I did. Did they look forward to me calling them back? They did. Did we have problems and work them out? We do. That's staying in business. That's creating relationships so that when people say, hey, Sonia's on the phone, can you take this call? They say, I'll be glad to because she's good to work with. That's the relationships you want to go after. So that's bookkeeping, forecasting, and negotiating, and how they all tie together for long-term relationships with you and your suppliers. I hope that some of this sticks with you. Some of these points stick with you, and we'll tie this together next week as we talk about taxes and deductions and things like that, and closing deals. And we wrap up next week our foundation classes for the course. Then we'll look forward to our face-to-face. So thank you all for being with us. I'll let your light shine. Find a place to meditate this week. Charge your batteries. I just believe in Jesus Christ as my Lord and Savior. I'm a sinner and He forgives me, and I start a new week every week. Find a place that you can do your meditation with where you find it, because it's so important to give a chance to restart your batteries and start a new week with a fresh attitude. So good night, everybody. And how about letting me have some comments back from you? I see Bart's with us. Thank you for joining us, Bart. Do you have any comments for our class?
No, I just wanted to thank everybody for coming. And then remember, if you're in Sampson County, just give me a call, and we can help you out with what you need.
All right. Thank you very much. Okay. Thank you again. Marquita, how was your class tonight? I know I catch y'all off guard sometime, maybe not right where you can talk. Anyone else with any comments?
Thank you, Bart and Steve, for the class tonight.
And thank you, Sarita. Good to hear from you. Thank you.
You sound better tonight.
Yeah, I am better. I had some voice when I started. I didn't have to use the herbal tea to gargle all night.
Hi,
Okay.
Steve. Marquita. I'm sorry, I was having a hard time coming off of mute. But yes, this is very, very insightful, and I do appreciate all the details around the bookkeeping.
Well, I hope it helps you, and we look forward to working with you, and we'll tie it all together next week. So like they said on Walton's Mountain, good night, family. I hope all of you rest well and have a great weekend.
Good night, John Boy.
Good night, everybody.
Thank you.
Y'all have a good weekend. Just let me know if you need any help with anything.
All
Thank
right.
you.
Thank you so much. Good night, everybody.